welcome. You're watching Countdown right here on Bloomberg Quint Live. The market's trading very subdued. The Nifty just in the red by closer to 0.1%. There were 14 points given up, but under 11,600. It's a very dull day of trade, and we'll talk about the internals in just a few moments. But for the headlines, voter turnout shows a promising trend as 1276 candidates go to the voters in 91 constituencies spread across 20 states in the first phase of the elections. Indian markets trade flat as investors choose to hold on to their bets with elections underway. Naresh Goyal may put in a bid for his erstwhile airline even as he pledged his own shares in Jet Airways to Punjab National Bank. And Vedanta is the top loser on the Nifty 50 today after the UK Supreme Court allowed Zambians to press environment violation charges against the company. Neeraj, good afternoon. Extremely tepid the mood of the markets, not just on the indices, but even the broader market space, subdued. Very, very subdued, and hardly any major movement. The Nifty Bank is the top moving index, which is down about 0.33%. The Nifty 50 is absolutely flat, and the reason why the Nifty Bank shows such a big gyration is because the other indices are so subdued. But it's only a 0.35% range, and as you can see, this is the extent of the movement today. It's been a 0.5% band in which the most volatile index has moved today. Shows you how tepid the day has been. The first day of the election season, and we don't have too much of a movement. Bring up the mid caps and the small caps, then bring up the India VIX as well. Hardly any movement for the broader markets as well. Absolutely flat. And mind you, the intraday will show you that the movement also was like this. The only thing is that volatility continues to rise. India VIX keeps on staying at elevated levels at 21.25. These would be nearly 5-month highs for the India VIX as well. You don't usually see this. It's staying elevated for such a long period of time. But yeah, you know what kind of time we are in. The election season is underway, so maybe volatility would be the name of the game. Bring up the heat map and show you what's moving on the index. To start off with, even Stevens ahead of the results. Infosys is down, TCS is down. The top loser, of course, is Vedanta, but the headline already told you that as to what's the reason. By the way, JSPL is the other one. I'm sure Devina will talk about that, or Agam will talk about that, but JSPL is the other loser. Again, on bad news for the metal space, and which is why Nifty Metals is the worst performing index. What's done well? Bajaj Auto marginally higher. Dr. Reddy's has some gains to itself. Some strength in Bajaj Finserv and Indiabulls Housing Finance. Yes Bank shouldn't be far behind. No, actually, it's not in the list of the gainers. Interestingly, Yes Bank in the session today. But somewhere down there amongst the tepid losers is probably Yes Bank too. Last but not the least, watch out for the HDFC Twins. They are heavyweights. They were active in trade yesterday. In today's session, HDFC Bank at least is up about 0.75%. But if large caps are tepid, mid caps aren't too different. Individual stocks must be moving around though. Yeah, they are. And before I move on to that, I'll just like to highlight Yes Bank's right here. It's down. Thanks, I couldn't find it. It's down about 1%. But yeah, you're right. There's nothing much that's happening even in the broader market space. I'm going to quickly just pull up the mid-cap index, and you know, the MRR function will show you the individual constituents and how they've been trading this afternoon. So starting off with the mid-cap index, which is absolutely flat. Gainers, though, come in the form of Manippuram Finance, which is up about 5.7%. Max Financial Services, remember, this has not had a really great period over the last 10 days of trade, but today has seen some bit of recovery coming back in. L&T in Technologies is up 2.5%. Then you've got some interest coming back into the fertilizer stocks. Diwan Housing Finance is up about 2.5%. Amongst the losers, Jindal Steel and Power, that's the worst hit. That's down about 4%. You've got Reliance Power, which is down 3%. Nalco, then you've got a Torrent Pharma. These are the kind of losers that you're seeing this afternoon within the mid-cap space. Amongst the small-cap stocks, just quickly, just to brush it aside and tell you what's moving there. Vakrangi is up about 12%. Ujjivan Financial Services 3% higher. Just Dial 2%. You've got a Karnataka Bank over the last few days has been active. Loser, Century Plyboards looks weak. Reliance Communication, it's a constant fixated spot there for Reliance Communications amongst the losers. And then you've got the likes of Jain Irrigation, IDFC Limited that are looking weak in the session this afternoon. But what's happening in the more liquid universe in the F&O space? Agam Vakil is joining in with that. Agam, good afternoon. Good afternoon. Well, it's been fairly quiet, and this is again on expected lines as we move in
through the first phase of the polling in this time's general election. We are, however, seeing a little bit of build-up in open interest as far as the Nifty is concerned. But talking about the Nifty Bank, that is where, well, there is absolutely no traction whatsoever. The spot is down by 0.5%, but it's really, well, there's a little change in open interest, as you can see on your screen there. But moving on to your wicks, something that we've been keeping our eye on. It is advancing, though not as much as yesterday, but it's still high, about the mark of 21.3, and that is well, going to remain a talking point over the course of the next few weeks, considering not only the general elections, but earnings too. Well, writing coming through or around the 11,800 mark, and I believe this one is for this week's expiry. But if you consider the 25th April expiry, that one will have 12,000 as the one with the maximum open interest. Let's move on and talk about, yeah, there you have it. That's the one I'm talking about. But moving on to talk about the stocks which are seeing a considerable change in OI in today's day of trade. Right at the top, we have Ujjivan Financial Services. Well, some very interesting moves coming through, considering its 50 DMA moved above its 200 DMA, making it a golden cross just a few sessions ago, and it's going from strength to strength, up 2.6% today as well. Bharti Airtel is the other one which is gaining considerably, and 20% added towards longs into this particular futures. But moving on, we have Manappuram Finance, and in fact, plenty of traction in NBFCs across the board. This one is gaining 6%, 21% added open interest towards buying. And the final one on my list is Vedanta, on the losing end, however, and 12% added towards shorts into Vedanta's April futures. Currently under pressure, but for now, at least in the FNO space, and with the ones with most traction and open interest, more gainers against losers.
All right, Agam, thanks very much for that. Those are a few stocks that you need to keep an eye out on. And the other pocket that we'll be closely watching out for is the oil marketing pack. So today's session seems to be a little bit of a breather for the oil marketing companies. You've got gains of closer to 1% across the board. BPCL, HPCL and IOC. HPCL is up about 1.5%. Remember, inventory gains is what you can expect in this quarter, but considering that the Singapore GRMs have come off from the previous quarter of 4.3 to 3.2, that could actually negate the benefits that you're seeing from the inventory gains. Watch out closely for this pocket. NTPC 1% higher. You've got Bajaj Auto, which is still your top gainer on the index.
Yeah, interesting times, though. We just worsened a little bit in the last few minutes, by the way. Keep that at the back of your mind. But let's begin the show with the market voice. Raunak Onkar of PPFAS AMC is joining us right now on the show with his thoughts. Raunak, good having you. Thanks much for joining in.
Thank you for inviting me.
What's the sense right now? Staying invested, or if it was possible to sit on cash, you would sit on some cash?
We do have a bit of cash, but we have come from a 30% cash to now somewhere about 20% cash. So we have been deploying wherever the valuations were reasonable.
Okay. That was not a market call that you take. You took because there was a bottom-up opportunity available.
Exactly.
Okay. Is there a risk of what could happen to maybe global markets, maybe local markets because of elections or other reasons, which could bring the markets lower, and therefore tactically, would you believe that you would continue to sit on this bit of cash for a little while longer?
Not really. So there is always some risk going to happen around the corner. It might be the election, it might be something else. So on a shorter term basis, you will have something or the other happening which will bring the market up or down. Point is, longer term, can you see a business which has a runway which you can bank on at a reasonable valuation? If it's not available, you prefer to sit on cash till you get a chance to deploy.
Okay. Where are the pockets that you guys are finding runways for growth? Leave out the global portfolios. Mm-hmm. What's the top positioning in the local portfolio? And what is it that which themes have you deployed that 10% cash that you've deployed in the last month and a half, I reckon?
I was saying more of a year of a deployment going on.
Is that? Oh, okay. I remember a conversation with Rajiv sometime back, about 2 months back, wherein he was saying that you guys were still on about 25-27% cash.
Yeah, 3-4 months. Over a bit of time, we're deploying as well as the portfolio adjusts to the cash level.
Right.
But I think we have been adding in pharma space, technology stocks that we own, even the banks that we own, and automobile stocks that we have. So we're adding across the board in the holdings that we have in the portfolio.
All right, Raunak, if you were to highlight for us one theme, with conviction, what would it be?
So I would definitely go with Alphabet, because the digital marketing space, which was a very nascent stage, if you look at 10 years back, the revenues of the entire industry where digital marketing was considered was a very small piece. Now it's a sizable portion, about 30% of the market will be digital, where Alphabet and Facebook kind of companies are taking over substantial market shares in whichever countries they operate. I'm presuming that India also has a 90% market share of these two companies combined. And that space affects Indians also, as well as the global users and global investors of their company. So in India, if you want to advertise digitally, we have two avenues which are readily available at scale and at a reasonable cost to an advertiser. And if the other areas available, you'll have to negotiate with intermediaries who will have inventory. I think at scale, if you want to do digital, media has been a very long-term trend. I think it's going to be a very longer-term trend as well, because the entire ad piece also expands along with that, where marketers who wouldn't have advertised before get a chance to advertise themselves in this new technology.
Would you have specific picks within the space, in the listed space?
So I don't want to talk my book too much, but we own Alphabet and Facebook because they are a market-leading kind of a duopoly in this space, and they are increasing their market share and their overall size in the pie of ad businesses. So they have a long runway for themselves as well.
Yeah, no, maybe the benefit for our Indian customer or the viewer right now would be that what themes within the Indian bucket are you guys comfortable on? Yeah.
So there has been this longer-term trend on private banks taking market share, which is ceded by the public sector banks. And that theme has been going on for a long time. It may sound like a broken clock to keep on repeating it, but I think there's a long runway.
And this is the broadest consensus idea that we've actually seen is this.
So consensus is not always wrong. I mean, we have an opportunity to scale that business as well in terms of private banks going in areas where they were not available before, taking advantage of technology services, which other companies also can take advantage of. I think we are paying more digitally now than we used to do before. So there's a reason to have a bank account now, because you can transact in a different way. You can get offers if you want to.
The other pocket, obviously, aside from private banks, that is somewhat coming up as a contrarian play is the autos. And, it's not consensus, it's contrarian. But are you of the opinion that the worst is probably maybe over in a few months down the line?
It's possible. I don't know when the cycle might turn again. But the point is, if you believe that India is a long-term growth story, discretionary spending is a very important part of that story. And a vehicle purchase is a discretionary spend. At the same time, you have cab operators scaling their operations in our country, going into other smaller cities as well. I think there's a demand there. Maybe there is a cyclical lull here and there, which happens anyway. We keep monitoring those trends. But in the longer term, I think it's an interesting trend to keep hooked onto.
So IT and Infosys and TCS come out with their results tomorrow, and that's going to kickstart the Q4 earnings season. 15% growth, is that something you're factoring in terms of earnings?
So we don't own the large cap IT stocks in India. The only large cap company we own in IT services is IBM, which is in the foreign portfolio. We have been focusing on the smaller size IT companies. So we have Persistent and Emphasis in our portfolio, which we believe have niche advantages for themselves going on, and they can grow much faster and have a longer runway than the larger guys who may have to face a fact that they're too large enough to grow from a certain point.
That's actually, quite contrary to what some of the other comments have been with regards to the focus being more on the large cap space, with growth out there being more visible compared to.
For sure. So the IT volume of work is never going to decrease. As companies scale up, as they become larger businesses, the IT need is going to be there. So I'm pretty sure the pie is large enough for everyone to grow, but we see that the delta over here can be much greater because they are more focused into areas they operate in. And of course, they will step on each other's toes in the competitive place. But I think this is a strategy we have taken because the valuations have been reasonable.
Is that the only reason why you've chosen Emphasis and Persistent, or their business case makes sense to you?
The business case makes sense and the valuations made sense when we invested in them.
All right, so these two stocks from the IT space. Within the financial space, and I'm not talking about banks now since you've already mentioned banks, but for NBFCs in particular, expectations are that while growth will come off from 22%, you'll still be comfortable at about 15% in terms of growth. Is that good enough to make an investment case?
I wouldn't know. So when we have seen the financial space, we look at banks compared to NBFC. So a lending business of a bank and a lending business of a NBFC, more or less lending is same. So when we are borrowing money, we rarely care who we are borrowing from. Whereas if we are lending money to someone, we are very cautious as to lend to a proper person who will repay the money. So I think from a borrowing point of view, anybody who is willing to offer money at a decent rate will have a market share advantage. But a bank's business has an advantage of having low cost of capital, which they can scale with the digital technologies that are available for them. At the same time, the branch network and the brand association is far stronger for at-scale banks. So they can scale in the same areas other people cannot. Plus, they can have a choice market of high credit quality people who they want to keep catering to because of salary accounts and everything being in that same network as such.
Raunak, my final question. Sorry, you were asking a follow-up. Otherwise, my final question, you mentioned that you like pharma. Now,
yes.
I'm presuming you like Indian pharma.
Yes.
Okay. What within that bucket would you like? Because if we look at generics, I think they've largely been, in terms of market share, somebody was telling us that they've gradually been losing some bit of market share as well. But there is an opportunity for Indian companies in countries like China, which have opened up in a big way. Companies like Divi's are doing that business in a meaningful way. You also heard of how Solara and API companies doing well.
Companies,
so where is it that you guys are finding favor? Which bucket?
So it's been a long time since we've been tracking the sector, and we realize that it's very hard to pinpoint which one company might do well because of all the issues of FDA, US market shrinking, other areas growing, and growth pains for many companies happening. We realize that we build a bunch of companies, a basket of companies in pharma space where we have certain characteristics which are visible. So they have put up assets in the past and can scale their operations much faster once the FDA issues have resolved. They have marketing capability across the globe in various geographies, not just in US and India, but also in Europe, APAC, and other smaller countries, Australia, if so it be. And these managements are capable of running larger organizations than what we see today. So although the sales have been scaled down, there's a degrowth in many companies' sales, but these companies can operate at a much higher sales growth. So they're geared towards generic pharma kind of a market space growth. And whenever that growth picks up, these companies are bound to benefit. I agree with you, the market shares have been hit because of the structural changes that we see in the US market right now. But I think more or less other pockets have been growing for these companies, and they have been tactical in identifying opportunities to grow.
So you're sticking to the generic companies, not necessarily following the API theme or some other themes.
API is an interesting theme, but again, as a B2B business, it's very hard to know what happens if that supply chain is disrupted for some reason. And then you have customer concentration risk coming in for large API players. The point is, if you can find a diversified API player at a reasonable valuation, we will take a look. But whereas the formulation space is there, everybody wants cheaper medicines, and the generic companies are geared to providing cheaper medicines all across the world. So prefer an opportunity where you have a larger part of the value chain rather than a smaller part of the value chain where it's just a B2B arrangement.
Slightly lower margin business though that, isn't it?
It depends. Really? It really depends. So for instance, if you look at a R&D done by a company over a period of time, and they are one of the few players in the market, they can capture a sizable gross margin from that business that they operate in, which will be still substantially lower than the innovator when he was in the branded case. So I think generic people, because of the cost advantage in India, we can still generate a 50-60% gross margin, and we can still scale across the world. I think the organizations are geared for the growth. So it's interesting to see when an FDA issue hits, it's a good time to look at them. Can they come back? If they can, let's see. And we build a small basket of those guys.
All right. Great chatting with you, Raunak. Thanks so much for joining us and sharing your thoughts on the show.
Thanks for having me. Thank you.
All right, that's a quick market opinion coming in there from Raunak, Onkar. Moving on, nothing much is happening on the indices for the time being. We're flat out on the Nifty, but the banks are looking slightly weak. So giving up closer to 120 points in the Nifty bank right now. But on to another topic then. India is in a period of relative stability, says former RBI Governor Raghuram Rajan. In a chat with Bloomberg earlier today, he spoke about why he thinks no party, BJP or Congress, is laying out a strong reform agenda. Listen in.
Are trying to talk about really what they will do for the marginalized people in the economy, the farmers, the poor, and so on. And nobody is laying out a very strong reform agenda in the next, in the post-election scenario. My guess is that will come, that has to come, because we really need to tackle this issue, as I said, of creating jobs. At this point, I think if you look at the BJP BJP's record and you look at the Congress's record before that, the agendas they followed have been pretty similar. The success of one party or the other has been really on the basis of how much political support they have rather than about a difference in agenda. One shouldn't make too much of policies at this juncture. I think there was an attempt to build bridges between the government and the central bank. What we need to look out for is the policies that emerge post-elections, which will be more reflective of what the underlying philosophy is. The same issues that are perturbing everybody else, which is how wide does this trade war get? Does the problem between China and the US get fixed, or do we have new fronts that are opening up, for example, on the auto sector with Europe and Mexico? So I think India, like everybody else, would be hoping that the trade conflict dies down rather than expands. India benefits tremendously when the world is more open. And historically, that's been the period of strong growth. Now, the other issue for India is really on monetary policy. If, in fact, this period of relative sort of quiescence or stability, that we don't have a period of rising interest rates, I think this will serve India well. It has to take every action it can to stabilize the economy right now. It has to look to its fiscal deficit, which it needs to straighten out. But this is a good time for it to do all that it can, and post-elections would be an opportune moment.
And what's hopefully going to hold the new government in good stead is the drop in our trade deficit witnessed in the first 3 months of 2019. It's not because India managed to sell more products to China or the US, but because our love for two very desirable items may be waning. Intrigued? Just go on to Bloomberg Quint website and click on our BQ Edge story of the day. It's what sets you up to take more informed decisions. All right, and back to market-specific stories. Then Wipro will consider a share buyback at its board meet on April 16th. Agam Vakil, he's joining in with the details of that. Agam, good afternoon.
Well, good afternoon, Devina. We were expecting some sort of news to come on the buyback, and now we have the announcement that the board is going to consider it on the 16th of April, along with its quarterly earnings. Well, we have a few brokerage notes which suggest that the buyback could be to the tune of $1.7 billion. And this is again in line with expectations of, as far as the markets are concerned, the company has cash worth around $3.3 billion. And while, everyone was waiting for certain amalgamation of its subsidiaries with the company and approvals to come in, now that that is over, the company is now free to consider that buyback. We have to remember that currently, as per norms, up to 25% of net worth can be bought back, which comes to roughly a little over 13,000 crores. So the company will be free to buy back that much. But a lot of analysts are suggesting $1.7 billion, which means that it will be to the tune of 11,900 crores. Again, this is conjecture, and we'll have to wait for the final numbers on the day of its earnings, where we actually have more details come through on the buyback.
Okay, Agam, thanks a lot for that. And it's going to be a busy day today, tomorrow for IT, because the IT earnings start trickling in from tomorrow. With the two IT giants, TCS and Infosys, coming out with the numbers. But really, the earnings season kicks off in whole earnestness tomorrow. And the question on almost everybody's mind is, what will the quarter look like? And whether or not we will actually see a robust earning recovery this time around. Darshan Mehta is here with the answer. Darshan.
Okay, so basically what we saw was that the third quarter number was decent. If you're looking at the number of strong earnings, that actually went up significantly from levels of 14, 12, and then all the way to 20. And the number of weak earnings came down significantly. What we are expecting for the fourth quarter, firstly, let's take a look at the EPS estimates also that came out. On the first quarter, if you're looking at the number, it was 114, it was stable. 121 was the number, and that was impacted on account account of the SBI numbers that came out. The expectations were much higher for the third quarter, and that came down to 97, and the loss and the big 27,000 crore loss by Tata Motors dented the third quarter numbers. Now, as far as what we can expect for this quarter, 137 is close to the estimate that we got at the start of the actual quarter when the second quarter earnings ended, and as of now. So it remains at 137. Now, in terms of some of the factors that we need to watch out when earnings happen, first of all, weak base may aid growth this quarter, given the fact that last quarter was a low base. The currency headwinds will continue for the IT and pharma sector, given the fact that the rupee has appreciated against the dollar. The third factor we need to watch out is that last time around there was a lot of provisioning that was done by the bank. So in this quarter, probably the NPA number may reduce significantly. The fourth reason that we need to watch out for is that in the third quarter, the metal companies did extremely well because pricing was at a high and there was global support, but that has actually come off this time. So in the fourth quarter, the numbers probably for the metal stocks may not be well, and auto probably will suffer this time given the weak numbers that we've seen. So on a broad heat map, if you put up what is expected to do well or not, aviation, because of the woes on Jet Airways, obviously is expected to do well. The other companies, banks, cement, IT, media, all of them are doing well. Autos and NBFCs as a pack probably won't do well. We'll talk about that in detail now.
So run us through, the individual sectors, like you just highlighted for us, what plays out for each of them.
So let's start with the first one, and that probably is the aviation pack. Ticket prices were higher, that aids for them. The passenger growth was not doing well, but the big turning pack was that Jet's loss is the gain for aviation companies like SpiceJet and Indigo. As far as banks are concerned, the asset quality may improve. Private companies may continue to post a robust growth, but the joker in the pack is any kind of IL&FS provisioning that will come in. We've seen the impact on IndusInd Bank and Yes Bank because of that. So that's banks for you. Again, cement will be strong. Price hikes have been taken. The South India players probably will do much better than the Pan-India players, given the fact that the pace of price hike has been much higher. The other companies that we want to talk about is the infra and cap goods space. The order book has been strong. Government orders were strong from the central side, but yes, the regional governments, the state governments, the PSUs, international orders have come in. That's what you saw with L&T. That will play out. Order books will be robust for them. The other factors that we need to watch out is for the IT company. The deal momentum will continue. The rupee strength may dent revenues this time around because of the currency headwinds. So that's IT. A couple of other sectors we want to talk about: oil and gas, strong marketing margin, possibly inventory gain. GAIL probably may be the loser this time around because of lower gas prices. Media companies also, slew of new launches that have come out that will aid the cinema companies. It'll be interesting to see the tri-order impact on DTH as well as broadcasters.
Right, and some losers, and where we expect earnings performance not to be up to the mark. Yeah,
autos, NBFCs are one of them. Autos, let's talk about the auto sector for one and how that has been impacted. Tepid volume growth is seen, heavy discounting was given. That was something that will aid dent auto. Replacement market may aid some of the ancillaries like the battery companies, so watch out for them. The other pack which didn't do well was the agri company. Weak Rabi season, inventory was higher, so probably won't be that good. Probably UPL may be aided because of the higher global demand this time. The other sector we want to talk about is the NBFC. Housing finance companies have seen a lot of stress. Slowdown in vehicle financing may impact some of the NBFCs. Again, telecom company, no tariff cuts have come in, higher rentals. That is something that you need to watch out for. It will be interesting to see how they pan out in trade. The other companies is the FMCG companies. Volume growth may be moderate. There is optimism of volume growth that will come in, and that is on account of higher rural growth. So it could go either way this time around for FMCG. The other few sectors is paint companies. Volume growth probably will be muted. The input cost is in their side, but companies like Kansai, which deal to the automotive segment, will actually face a lot of pressure this time. A couple of other companies, probably the pharma companies, lack of new launches, pricing pressure there, that will impact. But the API companies may do well, and metals as a pack probably will disappoint this time around. low base, lower pricing, and demand has been muted. So metal this time around expected to be a weak quarter.
All right, Darshan, thanks very much for that. So very detailed analysis of how Q4 could look like for particular sectors. Bringing in Jay Bala of cashthechaos.com. He's joining us on the show right now. Jay, good afternoon to you. Let's talk about the Nifty. Just about flat, no major moves. Last few days have seen some amount of exhaustion coming back onto the index. The banks too are looking slightly weak. 30,000 is a far cry right now. It's at 29,760. What's your sense now?
Yeah, good afternoon. The markets are doing what they are expected to do, and I think this is a correction that's going to drag the markets back to the 11,300 odd levels for the Nifty and closer to 29,100 on the banking index. So basically, you should expect higher volatility for the banking index compared to the Nifty. The Nifty might be relatively, lower volatility because the money is starting to move into defensives like HUL, and that might actually, cushion the fall the market's likely to see. But I think once the range of 11,550 to 11,750 is broken, which I think is going to happen, I think the correction is going to get drawn a little lower. The supports for the Nifty is around 11,275. So any ballpark figure around that will be a good pullback for this market, and the strategy remains to buy on dips and look for stocks that have not yet participated in this leg of the move. And specifically, if you look at the private sector banks, if it comes closer to 16,500, that might be a good entry point. When it comes to the PSU Nifty index, you might want to buy PSU banking stocks around the 3,100 mark.
So which are those stocks that have not contributed in this rally? Jay, have you managed to pull out some for us?
See, for example, HDFC Bank has had a breakout and it's surged with huge volume and then pulled back, whereas ICICI and Axis were the ones which are leading. But if you look at something like an S Bank, it just had a breakout about 240, which we spoke a few interactions back. 240 was a very important level for it. It's taken out that level. So watch out. It's probably going to somewhere close to 330. So this pullback that's coming through in the last two sessions for S Bank is a good entry point. And you can look at something like an IndusInd Bank too, which is slightly weak. So names like this, which didn't lead the market to higher levels, you should be filtering them out for the next leg of the rally.
Okay. Having said that, so that's for the next leg of the rally, and that's probably a more positional call, Jay. What about the near term? What are the stocks that you're recommending for the day today?
Yeah, near term, you have a dime a dozen, and basically, focusing on the higher time frame is helpful in the sense because if you focus on the short term, what if this correction doesn't come back closer to 11,300 like I'm anticipating? So that's the reason why I focus on the higher time frame call. But I have two strategies for today. One is a long on Siemens India, and this has broken out of a inverse head and shoulders pattern, and it's completed a medium-term correction. And so this is also breaking out of a range. So I'm expecting this stock to go to record highs past 1,800. So one can place a stop below 1,025. And the second is a long on HUL. As I said earlier, money is starting to move into defensive. So if the markets were to correct like I'm anticipating, HUL, which was the leader in the first leg of the rally for the markets, in fact, if you look at the charts, HUL was the first to hit record highs from the October lows. So that opposed that correction from the record highs. Now the money is starting to trickle in once again there. And if you look at the charts from October to the highs, whereas its momentum or price structure, both are pointing to an incomplete price high. So the correction is also in a harmonic ratio. If you look at the secondary lows of HUL to the record highs, the recent low that we saw is a near perfect 61.8 Fibonacci retracement, and in the last two sessions, it's been bumping up in a small tangible way. Expect a big upside day in very soon. So it's a short-term strategy as well as a medium-term strategy.
Jeb, today the metal names have looked particularly weak, and two of them have news. Vedanta has news, JSPL has news, but the Nifty Metal Index has taken some stick. Tata Steel is the second worst performer, down about 1.4%. Which amongst these names looks the most vulnerable?
Let's put it this way. Which among these two is a better risk reward when it comes to shorting? I would think Vedanta. Vedanta, from a medium-term perspective, it has one of the poorest charts within the metal space. So I would place a stop above 189, which is 188 is today's intraday high. And I'm expecting this stock to drop somewhere close to 160 or probably below 160. Tata Steel is above its 200-day moving average. So it is, on a relative scale, it's slightly better off. And if you look at the movement from the lows, it looks like a start of at least a short-term trend, because from the low of about 440 to about 560, it's gone up in 5 steps. So a pullback to somewhere about 505, 506. That'll be a good re-entry point when it comes to Tata Steel. But in the short term, both have some downsides. But from a shorting perspective, in the direction of the higher time frame, Vedanta lines up pretty well.
Hadrien Mendonca of IIFL with us on the show as well. Hadrien, good afternoon to you. How are you approaching trade today? Is there a trade that you would take on the index, or is it better to leave the index alone because it's so quiet and look at specific stocks?
Yeah, hi, good afternoon, Neeraj. If you've noticed that our indices are actually stuck in a trading range. So for the Nifty, it's very important the 11,550 levels, whereas on the upside 11,760 by default becomes the higher end of the range. So I think until and unless this range is broken pretty convincingly, either of the side, I think I'll prefer to leave the index alone. Stock specific action is definitely visible. Majorly we are seeing good action in the PSU banks and also in the other PSU government companies. So I think we'll prefer to focus on those stocks rather than the index.
Okay, so let's talk about, it's interesting that somehow the set of stocks are turning out to be a lot similar, and I'll get to that as well. But Hadrien, first, your daily trading recommendations for the day, something that you're comfortable recommending this afternoon.
Yeah, absolutely. The first stock that we are bullish on is BHL. Again, as I mentioned, public sector unit. I think BHL is actually a good, it merits a buy around these levels because it is finding support at its long-term 200-day moving average. Secondly, it has fallen constantly, and for the first time yesterday, it gave signs of a reversal. And today itself, it is backing up. So we are seeing some kind of follow-up buying as well. So I think BHL merits a buy at these levels. It's not that we are, trying to catch BHEL after a very huge breakout, and we have missed out a lot of up move already. I think we are trying to bottom fish BHL after a very strong down move. One can consider going long on BHL. We are expecting a target of 78, keeping a strict stop loss at 71.5 on the downside. Now the second stock that we are bullish on is Maruti. We have seen a very good structural breakout on the smaller time frame charts, an early sign that even the daily charts would follow. Maruti is actually broken out from a cup and handle pattern. I think keeping a stop loss of 7150, positional buy can definitely be a good position to hold on to currently. We are expecting a short-term target of 7550 levels in the near term for Maruti.
Okay. Bala, I'm going to come to you with the other one from the auto pack, and that's Hero MotoCorp. Has that turned around meaningfully for you to initiate a buy trade on that one?
Hero MotoCorp, unfortunately, has been a disappointment for me. I had expected to do much better than what it's done the last few weeks. It's actually not broken the lows that it made earlier in March. But it looks like it's meandering around the base, so it may not be the best bet around these levels. But whereas if you look at Maruti, it went back and retested the lows around the 6,500 mark, and it's bounced back up. So that is a stock that is standing on two legs. So that's an important price move. So if you want to pick up something that's around the low levels, it might be Mahindra and Mahindra. It's had a decent bounce and a correction, and it's looking like it's clocked a higher low. So that might be a better bet. Also, talking about other auto stock, Tata Motors, which done phenomenally well in the last few weeks, probably just seen about 20-25% bounce. It's actually had a inverse head and shoulders reversal. So it's at least partially reversing the decline from the 2015 high to 2018 decline. So you might see further upsides closer to 265, 270 for Tata Motors. So watch out for it. It's a buy on decline.
Okay. Stay on, gentlemen. So much more to talk about. Let's get in our fundamental guest on the show as well. Siddhartha Khemka of Motilal Oswal with us. Siddhartha, as always, good having you. Thanks much for joining in. There is a bit of a lull before in the IT pack before the earnings kickstart tomorrow, Siddhartha. You guys would have already done your work, come out with the research notes as well about which IT company could clock in the best quarter, so on and so forth. What is that you envisage in this earnings season from the IT pack? And which is that one earnings delivery that you personally are watching out for?
Good afternoon, Neeraj, and it's always a pleasure being on your show.
Thank you.
So on the overall IT pack, if you see, we expect another set of healthy numbers. This would be the fifth consecutive quarter of double-digit PAT growth for our coverage universe in the entire IT space. So on an aggregate, we are expecting a sales growth of about 18% and a PAT growth of about 12.5%. There would be significant revenue acceleration, mainly on back of strong momentum in the deal activity, while INR appreciation could act as a headwind. So the bulk of this incremental growth is coming from, again, the heavyweights, the likes of TCS, which will account for almost 43% of our incremental PAT from our technology universe, followed by Infosys and HCL Tech. So if you see in terms of the companies, TCS and Infosys will be coming out with numbers tomorrow. So on a Q-on-Q basis, while the profitability will be more or less flattish, the top line growth will be much better in terms of TCS compared to Infosys. So we are seeing a Q-on-Q growth of about 1.5% in TCS, while a 1% sales growth in Infosys. And in terms of net profitability, as I told you, on a Q-on-Q basis, they will be largely flattish, while on a Y-on-Y basis, again, TCS will have a healthy growth compared to Infosys.
Okay. The movement today in select stocks is pretty interesting. We're talking about gainers, yes. Ashok Leyland, the last 2 or 3 sessions along with Tata Motors has been on a roll. I don't know if it's the resultant impact of Tata Motors movement that is leading to Ashok Leyland do so well, but that is up 2.5%. The last 3 sessions, I think Ashok Leyland has put on a damn good show. As has Tata Motors, of course. It may be not, Tata Motors is not doing what it's done in the last few days in today's session, because yesterday's session Tata Motors was up about 4.5, but it's continuing from where it left off, which is being in the green. So that while a general cloud on autos and the best performing stocks of the last 2 or 3 years are not participating. Eicher Motors, for example, is not participating. Hero MotoCorp is not. But the CV players and Tata Motors and Ashok Leyland both have done very well in the last few sessions. Is it people finding value? Are things turning around a little bit in terms of view for CV players? And if that is indeed the case, why is it that Eicher is not participating?
Yeah, so Neeraj, if you see, it looks more like a value buying that is happening in the names, especially Tata Motors and Ashok Leyland. We had seen both the names falling very sharply in the last couple of months. Both had their separate reasons, while Tata Motors had been issues with JLR, and we had seen the recent numbers on a monthly basis that keeps coming on. Even yesterday, the numbers for JLR came in, wherein we saw again a decline of on the wholesale front, the JLR volumes declined by almost 8%. So that continues to be the case on ground. Specifically in case of Tata Motors, the CV right now it doesn't has a much of impact on the overall numbers as JLR occupies that. In case of Ashok Leyland, again, the CV segment may not, while it has a bigger contribution, the on-ground doesn't look like that things are improving. We got the monsoon estimates as well, which are below normal expectation, and we have the elections. Post-elections, we could see some improvement in the infrastructure space, in the cement space, in the cap goods space, wherein there could be which could lead to increase in demand for CVs. However, as of now, on ground doesn't look like. What has happened is that a lot of inventory which was there in the system has come down from about say 80-90 days to about 40-45 days, which suggests that yes, some cleanup is happening on the inventory level. Valuations is one factor which has helped. I think value buying is happening. Bulk of the sectors where we find quality or we have preferred picks have moved up so drastically in the past 2 months that it becomes very difficult for new money to come into the same names. So people are looking for some of these names where they can find long-term visibility and the current valuations comfortable.
Okay. Let's try and get some views on specific names on which there have been queries as well. State Bank of India, Siddhartha, Khemka, they're going to do a fundraise. The expectations are that some of these corporate-facing banks and SBI from the PSU space as well will see credit costs coming off, NPAs coming off, and therefore the PNL will look very strong over the next few quarters. Is that a reasonable estimate? Would you invest in a State Bank of India ahead of the earnings?
Yeah, so that's what the street expectation has been for the entire corporate facing banks for quite some time, and so has been our view in terms of the banking space. We expect the entire corporate facing banks to, so they have already started witnessing deceleration in the NPA formation. Credit costs have come off. The provisionings have come off, which is leading to a sharp improvement in profitability. So having said that, yes, we have been positive on the entire space. So the preferred picks includes ICICI, Axis and SBI, and we have been recommending a buy on all three from the last 3 to 6 months. So the question, buying before the results, definitely yes, because the results are expected to be much better on a Y-on-Y basis. That is what the street is expecting. There could be some trading opportunities where once we see the results, there is generally profit booking by traders, which could lead to some volatility. However, for our long-term investors, it's a perfectly nice, good time to add on to some of these names.
Okay. Long-term might be a good time to add up some of these names. The other question that has come in is on NBCC. It's received some large orders, 3,000 crores in the month of March, and as a result of that, the stock was active early morning trade, currently about 1.5%. The technical experts on the show today have all have said that, or not just on the countdown show right now, but even earlier in the day, mentioned that there is some traction in public sector units. Now, NBCC is right up there in terms of the best performing public sector units, at least up till 2017. Then it's lost a bit of its mojo. It's now starting to get some orders as well. A stock worth investing?
Yeah, so NBCC is a stock we don't track, so we don't have an official view.
Okay, so I'll leave that out. Let me ask you about a stock on maybe which you have a view, and this is the one that is not performing, and that is Century Ply. There was a downgrade that came in about whether or not the company will be able to have a decent quarter or next. And the last 4 sessions, it has come off 3% down today, but it's been losing ground steadily for the last 3 or 4 sessions. Do you have a view on Century Ply or any of the other plywood makers, Siddharth?
Again, we don't cover that space. I can briefly comment on the housing, the building material segment. We have seen last 2-3 years where the growth has come off, not only for the plywood companies but also for the likes of the ceramic players, tiles, some impact on cables and wires companies. But the cables and wire segment is one segment in the entire building material which has consistently delivered good growth in terms of numbers. If you see the numbers of the likes of Havels, the likes of KEI Industries, and the recent company which has come to the for listing is Polycab. Again, the volume growth has been consistent. I think that has to do more with the entire government focus on electrification, the entire focus of government on making electricity reach every village of the country. That has helped that space. While the other segments, for example, the ply and the tile segment, they have struggled because of one, the inventory pile-up has been very high in the past for the real estate space. The recent initiatives from the government does look promising for the entire real estate and the quasi players like the plywoods and the tile segment. So I think good times may be there, but we'll have to wait and watch. Individual company specific, we don't have any views on either of the tiles company or the plywoods, but we do have a buy rating on Havels and KEI Industries.
Havells and KEI Industries, we will watch out for them this earnings season as well. Stay on, Siddharth, so much more to talk about. I just want to look at companies which have either done well or not so in the last few minutes of trade and see if there is some merit in viewing some of these. There is Vakrangi, but I'll give that a bit of a skip. It's gained even further. It's now 19%. Let me not take a view there. The one on which there is a bit of a jump and it's moved from the red into the green is Symphony. It's up at 1393, up 3.5% in the last 45 minutes of trade. So big spike there. It's not as trader friendly a stock as some of the others, but if I can get you in out here, Hadrien, Symphony 1393, it's entering this earnings season very strong compared to what it has done in the previous few. What do the charts indicate here?
Yeah, you rightly mentioned that it is not a very trader friendly. It is pretty liquid in nature, but purely by going the structure by which the stock is actually moving in is absolutely solid. Every low is higher than its previous low, and even the highs are doing the same thing. So higher top, higher bottom structure is in place. I think ideally it should be a very good time because the correction which came in the past 2 weeks, it actually dragged the stock towards the 1320, 1330 level. So since then, it is once again trying to pierce its previous top, that is close to the 1420 levels. I think that will also be pierced pretty neatly going forward. So long positions can definitely be held on to. Fresh positions as well can be considered as in the near term. 1450 to 1460 cannot be ruled out on a Symphony.
The other set of stocks which are doing very well are power names. And just look at these 3 or 4 power companies which have just gained in the last few minutes of trade. Adani Power, Tata Power, CG Power, all of them have moved up in the last few minutes of trade. So some spikes out there, nothing too dramatic, but they've all moved back into the green from being into the red. Sharp spikes into each of these names. So do watch out for them. Jay, if you have a view on any of these power companies.
Yeah, see, Tata Power is one of the weakest in the power names, and I would think Adani Power is a better bet within that range. See, from the lows of about 20, it's gone up to about 56, 58, and it's pulled back to about 34. That's a good correction, and then it's bounced back, and it doesn't even having a short-term correction. But the range for the short-term for Tata Power, Adani Power has been 46 and 54. Once that's taken out, we can look at a fresh 52-week highs closer to 60 for Adani Power. Siemens is also within that name, so it's really very much related to power sector, and that's one of the reasons why I picked up this as my strategy here. And this is going to be an explosive move. Watch out for Siemens.
Okay, Siemens there. The stock at 1,174, up just under 1% in today's session. Jay, is there a trade in any of the oil marketing companies? If we were to take a look at a BPCL, an HPCL, and IOC?
I'm sorry, I didn't catch the name. Which one is it?
The oil marketing companies, HP, BP, IOC.
Oh, okay. Yeah. See, HPCL, BPCL, they are all coming to a very important support. But chart structure-wise, BPCL is slightly better off than HPCL. The crucial support for HPCL is about 240, and the crucial support for BPCL is about 340. So if you got to take a bet, you have to use these levels and approximate around these levels as a stop. And if you are trying to turn long, you want to get in around those levels. But if these levels are breached, probably it's an indication that the correction is not stopping around those levels. But over the slightly higher time frame, I think both have actually put in a bottom. The bottom that we see that we saw in October, the spike low after the subsidiary announcement or something. I don't recall the exact news, but around that low is going to hold, and it's put in a very important low. And Brent is also coming to an important resistance. Probably another $1 or $2 upside for Brent. And after that, I'm expecting a good correction to come through for Brent. So it's lining up well for the downstream oil companies.
Okay, that's the technical view on the oil marketing companies. I know Motilal Oswal has very strong research on this space. Siddharth, if I may ask you, one is earnings delivery and what they could do is one. Two is whether or not these are good stocks to buy. What's your recommendation?
Yes, Neeraj. So, if you come to the results expectation with the crude oil prices moving up now, the overall expectation from the oil and gas pack is not much from this quarter. So, we expect the overall coverage universe under oil and gas to have a flattish PAT on a Y-on-Y basis. This is largely been driven by the oil marketing companies, which are likely to report a decline in their profits on a Y-on-Y basis. This is owing to the lower GRMs. The only silver lining is ONGC, which continues to report strong numbers. We expect a 26% PAT growth for ONGC. And if we remove the oil marketing companies from this aggregate, then the overall oil and gas space universe PAT appears to be a growth of 15%. So in this environment where the oil prices are moving up, the GRMs are low, the oil marketing companies are not reporting good numbers, they have already fallen a lot. So coming to the view, some of these names do have a value at these pricing. So the price factors in the result expectation, and some of these names offer good dividend yield as well at these levels. So one needs to be cautious. It's not a buy for everyone in the street. Investors who understand the risk, and given that this is a sector which does have some of the political interventions, and given that election is there and the new government would be coming up in 2 months. So there could be some changes, as we saw last year, where the government came back and said that they would come back to the OMCs to share the subsidy burden, which was a structural positive for the last few years. So having that risk at these prices, we definitely like some of the oil marketing names. For example, Indian Oil Corporation, which is the largest OMC, very good cash flows. Bulk of the capex has been done, and we believe that with the newer refining capacities, the growth in the coming years should be very good. Current valuations does offer a very attractive entry opportunity.
Okay. Stay on, gentlemen. So much more to talk about as we slip into a short break. Let's hear out what Chakri Lokpriya of TCG Asset Management is saying when it comes to rebalancing portfolios by placing a higher preference for banks.
I think, it's a good thing about the buy side and the sell side, in the sense that there is a rotation which constantly happens in stocks of upgrades and downgrades. And for example, Asian Paints saw a downgrade. Now the fact was it was trading at 50 times, it's still trading at 50 times, and its earnings growth rate is not going to really change that much. So from that perspective, it's still a market leader taking away market share, so we will hold. Will you add to Asian Paints? The answer is no, because it's already up there. And the other consumer names, you're seeing that trend. The really expensive ones will continue to be expensive, but you will make incremental return out of it. Not really. I mean, you would make that marginal return, but not an outperforming return.
I think more than just the valuation, also, the demand within the sector, the slowdown of economic growth, the higher crude oil prices in the near term, I think more of those factors weighed in towards this downgrade, and that would probably be a blip in a longer scheme of things, in a larger scheme of things.
You're right. I mean, if you look at, for instance, this quarter, I think they'll actually have a good quarter, because the inventory would have helped them. And so I think part of the downgrade reflects that the next quarter will be the opposite. Because the crude has moved up 30%, some of their raw materials have moved up along with that, and whereas demand has not moved at the same pace. And therefore the pricing, they're passing on some amount of the pricing to the end consumer, but the consumer again, end market is again not too very strong. So against this backdrop, I think these stocks you wouldn't really make a strong return, but they're good names to hold.
Okay.
What else in your portfolio do you think is worth looking at in terms of rebalancing?
I continue to like banks, and I think that you can still make a fair decent return, a strong return at that 20% plus over the next 1 year, buying both the frontline banks as well as the second line banks, both private and PSUs. You know, now in the next week or two, SBI is going to raise about 10-15,000 crores to shore up its balance sheet. Yes, will also do that in the coming weeks or month in a short time frame. So which means there are actions that are being taken to ensure that they can continue to grow or rather accelerate their growth. And the valuations are not really that demanding. Balance sheets are better than they were last year. So that's one area we'll continue to focus on.
You know, it will show in the numbers, won't it, Chakri? This quarter itself, you might probably see the P&L, or this quarter in the next few quarters, the P&Ls might start showing the impact of, reduced NPAs, credit costs coming off, all of that. Where do you think, from a 3-year perspective, you'll get a bigger bang for the buck? Would it be in a name like ICICI Bank or an Axis Bank? Just play with me. Or would you, from a 3-year perspective, look to put money into a Kotak or HDFC Bank? I'm just using those names as an example to give the variety.
Yeah, even just using those names, I think the first two, ICICI and Axis, are more inexpensive valuation-wise versus Kotaks and the HDFC, and partly because of well-known reasons that brand, better-run banks, etc., etc. Now, but these banks, the ICICI and Axis, have done a lot of good work in the last couple of years. They changed their book. They've repaired their balance sheet, they're raising capital and all of that. So which means I think, yes, there's more return to be made in the first two.
What is the meaning of this word suspense? Suspense is something very intangible. Say we show somebody getting killed. For me, I'm not interested in a whodunit. The moment the audience knows that this person has done it, and he has to ensure that he doesn't get caught, there is a certain tension in that. I try to give away as much as possible to the audience and still keep enough aces up your sleeve. I don't think any director would be able to say, okay, this is my style. I don't think I can define it.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're still with us here on Countdown. 27 minutes left to go for the market closing. I'm going to quickly look at what's been happening. So Nifty Bank has reversed some of those losses and now moving just about trying to move into the green. So we're down just about 7 points on the Nifty Bank, 29,799. Nifty 2 is in the green right now, but marginally. Taking a look at what's been happening across the globe, and we'll take a look at Europe and how markets are trading currently. You've got the FTSE CAC as well as the DAX, a mixed bag move in the session this afternoon. Up about 0.5% for CAC, the FTSE and the DAX trading down in the red. The Dow futures up next on your screen. That too is trading absolutely flat right now. Advanced decline ratio, and we take a look at the turnover as well and how it's building up so far in a very tepid day of trade. So looking at the advanced decline ratio, it's clearly in favor of the bears this afternoon. You saw that crisscross early in the morning itself, and then from there on it has been in the bear grip. Turnover then, an 18.1 lakh crores. It is Thursday, it is the weekly options expiry, so you are going to see a bigger number. NSE cash is at 24,300, could expect a nudge towards 30,000. Let's talk about some more stocks and what's moving about in trade today, and bring in Yash Upadhyay with his list of the Fab 4 stocks. Yash, good afternoon.
Good afternoon, Devina. Crude oil prices came off overnight after there was the data which came out on the US crude oil inventories, which had hit a 17-month high. On the back of that, the oil marketing companies, they are seen trading higher today. HPCL up about 1.5%. Wockhardt had gained as much as 2% today after the company received the US FDA's approval for the launch of its cancer drug. It has an estimated market size of about $120 million in the United States and will be manufactured at its Hyderabad facility. PVR had hit a fresh lifetime high. It surged about 2.5% in today's day of trade, and with that it has managed to gain close to 10% in the month of April. And lastly, I'm going to highlight Ujjivan Financial, up 3.5%, a high surge in open interest, more than 44% seen there, which indicates that the traders are taking fresh long positions in the counter. Back to you.
Okay, thanks a lot for that, and Yash, thanks for putting that into perspective. That was going to be my question to Siddhartha Khemka. A new CEO, experienced hand, ex-HDFC, Siddhartha Khemka, Ujjivan Financial Services. Any thoughts here?
Yeah, so this is a positive development if this were to happen. We went through the profile of the name that is going the rounds, and has almost 17 years of experience in HDFC. So a small finance bank getting a strong person from the like of HDFC is definitely taken positive by the market. And given that the SFBs got impacted in the past because of the demonetization and then GST and the entire market, especially in the MSME segment, which were still reeling under the pressure. So these SFBs were not doing that well. Now with a strong hand at the helm, the company should do well. Also with that, the market is now expected to open up, the SME segment doing well, and some of these SFBs which were earlier trading at very high premium valuation, now coming at attractive valuation. So all this put together, I think they were out of sight, out of mind kind of thing from the market, and suddenly this news has brought Ujjivan from nowhere into the limelight, and that is why we are seeing such kind of high interest in the market, and that should definitely be positive for Ujjivan.
All right, that's Ujjivan Financial there. The stock for the last 7 days, 4% higher. We leave it at that, Siddharth. Thanks so very much for joining us this afternoon.
Welcome.
Joining us now is Mayuresh Joshi of Angel Broking. He's here with us on the show. Mayuresh, good afternoon to you. Let's talk a little bit more about what's been happening, particularly within the banking space right now. And you've got SBI particularly that's gained some amount of traction in the last 1 month or so. The stock's not done badly. It's been up about 10% in the month. Would you start looking at some of these names, and particularly even the PSU lot? Any banks that strike a chord?
So afternoon, Devina. No, so I think a large element in terms of the PSU bank recovery has been led by the recoveries and upgrades in their P&L. So they have shown a significant traction on that count. And if you probably take into account the capital infusion that has happened from the government side to take a few of the mid-tier banks out of the PCA norms, their net NPAs are at far more manageable levels at this point of time. And considering the elevated provisioning that these banks have done over the past few quarters, NCLT or otherwise, I think they're in a far better position at this point of time. Now, one may point out that you might see or expect to see granularity in terms of reported numbers, specifically recoveries and upgrades still expected to remain on the higher side as per the bank's managements, and what you probably expected to see in terms of advances growth. I think that is going to be a key trigger for these banks going ahead, specifically from a balance sheet expansion perspective. So the mergers that we've seen play out for a few of those banks, I think the merger synergies obviously will take a few quarters and the numbers to stabilize as well. But I think the top tier banks, something like an SBI, is something that we have held on to. The premise here is very clear. I think the CASA ratio probably remains at a very healthy level. What you've probably seen in terms of NIMs expected to remain steady and show a gradual improvement over the next few quarters as advances growth improves and credit costs start coming down. So I think multiplier effect, both in terms of a book value, should probably start accruing in numbers. Within the mid-cap pack, I think one must really be a little bit more selective when it comes to the earnings profile and the earnings trajectory on that count. So I think a few of the banks, if they can report consistent numbers, I think those banks can probably look decent enough over the longer term. Oriental Bank probably looks like a very decent bet even within the mid-cap PSU space.
Okay, Tata Motors is the other one that I want to talk about, and we've seen the good move on the stock of late. And yesterday's session was up about 4% today as well, against closer to 1% odd on Tata Motors, taking it 218. Bala, anything on Tata Motors and whether or not you can place an upside target to this?
Yeah, as I said earlier, I'm working with an upside target close to 265 to 270 for Tata Motors. But it's done a sizable run from mid hundreds to where it is now. So it may not have that much energy to go straight up. So it might have some sort of a sideways consolidation or a shallow pullback. So, but definitely we have not seen the end of the rally for Tata Motors. 265 to 270 is a conservative target.
Okay, and Mayuresh, Q4 around the corner, not just for Tata Motors, but for the entire auto pack, expected to clock in weaker numbers, tepid volume growth, heavy discounting to weigh in. For the ancillary pocket, obviously, it's a different ballgame because you may have the replacement market play up in their favor. But what have you, gauged in terms of an anticipation of how Q4 is likely to shape up for the autos as well as the auto angs?
No, so as you rightly pointed out, Devina, I think the slowdown for all the factors that you're probably mentioning, the kind of inventory in the system at this point of time, which means that the companies have to resort to heavy discounts for this quarter as well. There are also expected inbuilt costs coming through, different regulatory changes coming through. So the ABS change which has come through, the cost push will happen in terms of realizations going up. What kind of an impact does that have on volumes is something to be seen. You've obviously got the BS6 impact coming from 1st April. So I think there will be an element of pre-buying in the second half as well. But I think the disruptions that you've probably seen because of a high base created on a year-on-year basis, the kind of inventory levels both at the dealer end and the expected production cuts, as we've been hearing, to get all these elements in place. I think all these factors are probably going to play a part in terms of the slowdown in reported numbers. For the auto ank universe, you're absolutely right. I think the replacement market probably offsets the kind of pain points seen through the OEM channel. And what we've probably seen, again, from the replacement market for the battery makers, for example, lead prices have also come down. So I think input costs have marginally declined on a quarter-on-quarter basis, plus the added impetus in terms of realizations actually improving for the replacement market holds their numbers in good stead. Tire companies, again, I think falling crude prices, crude derivatives coming off sharply. And again, I think the other variants that you probably look at, nylon cord tire prices, all those prices are also coming off. And though it's a commoditized business, I think the radialization story is here to stay. And though I think the fortunes depend in terms of how the OEM market might function in terms of the direct volume growth, I think the long-term story probably still remains intact for a few players where capacity expansion is on the right track and the expectations of margin profile stabilizing and improving over the next few quarters stays constant. So I think a few battery makers probably could do well. You're also looking at a few bearing players which also can probably do well over the next few quarters, albeit the next 2 quarters might be a little bit sticky. But yes, I think the auto ank universe probably might stand out compared to the auto universe in this Q4 numbers.
Okay, got that. A few other stocks making big moves in today's session, and volumes are pretty stable on these stocks, include the likes of Shankara Building Products, which is up about 8.5% right now. Volumes are way higher compared to the last 20 days average. Bharat Dynamics, the stock's at about 311 right now. It's up 6.5%. 26.5 lakh shares have been traded on the counter. And it's literally saw a vertical move in early morning trade and has somewhat held on to those gains. SL Pro Pack 122 now on the counter, and it'll be interesting to see the last 7 days and last 1 month move for an SL Pro Pack. These two, as you can see, mid-afternoon sometimes saw this big move coming in there, post which the stock has stabilized. 1 month move on SL Pro Pack, stock's up about 10% but I believe the last 7 days, including today's gains, will definitely be a better number. All right, I think it had seen a cut in the middle. That's why you got the 7 days number absolutely flat. But taking a look at the stock charts for an SL Propack, Jeff, firstly, do you track this one?
SL Propack, yeah, it's had a minor double bottom at 85, and it's moved up from there in a very trending manner. So the next resistance the stock faces at about 125. So once 125 is taken out, much bigger upsides is there for the stock. But it's come very close to that level, and it's worked up from that sharp decline from 95, and then it bumps back to 123 now. So 125 is a big resistance, not because it's a round number, but there is a further resistance that's implied by the stock price action. So once 125 is taken out, we can look at something close to 156 for the stock.
Okay, that's SL Propack. Watch out for that one. It's time now to take a look at what the leading rooms are recommending this afternoon. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon to both of you. Darshan, let's start off with you.
Yeah, so one of the stocks that's been actively spoken about is Dewan Housing, which has managed to move up in trade. Dealers indicate some of the HNIs are actively accumulating the counter. So that's something that's been spoken about. The other stock that is buzzing in trade is Bajaj Finserv, which has managed to move up almost 2% in trade. Dealers indicate that the momentum will continue with trading at record highs, and they believe that this will continue. And finally, tomorrow TCS will report numbers. Some of the dealers indicate that probably on the margin front, TCS may disappoint. So a little bit of short positions that were taken on the counter. That's what dealers are talking about. But Yatin, what are you hearing?
Another Tata Group company, Darshan, Tata Power is one stock wherein dealers are recommending a buy today, sell tomorrow. And as we speak, the stock is touching the day's high. There have been talks in the marketplace about the resolution and the order of CRC regarding the Mundra power plant. So both Adani Power and Tata Power are quite anyways active in trade today on the back of that speculation. Havells is another stock wherein dealers are recommending short selling. They are expecting some downtrend to continue as far as this consumer name is concerned. And finally, JSPL also, that stock was down over 5%. I last time checked, okay, 3.5% down for that one. Dealers do indicate that a lot of domestic funds are said to be sellers in the counter today.
All right, the stock though is down about 3.5%. Yatin, thanks very much for that. Hadrien, JSPL on the charts down 3.5% today.
Yeah, definitely we are observing pressure on the stock, and because of the move, we have also seen the stock is actually broken below its long-term 200-day moving average. Now, if you come to the weekly charts, we actually witnessed a breakout 2 weeks back, but unfortunately, there has been, the stock has been unable to actually hold on to those gains. So I think we'll witness more of consolidation in JSPL before we see, the northbound journey that Jindal Steel and Power showed when it rallied from 120 to 170. I think one should be patient enough to hold Jindal Steel and Power. One should have a 1 to 2 months view if we want to see the target of 210 to 220.
All right, should just pull up an Inox Leisure. While PVR is not doing a whole lot badly today, should see what Inox is doing in an extremely flat market. So that's down about 1.6%. But nonetheless, the stock has seen a decent enough rally on the back of a good pipeline, expecting Q4 to be good for Inox Leisure in terms of its overall earnings performance. Mayuresh, for these exhibitors, PVR, Inox, what's Q4 likely to look like?
I think there should be a reasonable and decent set of numbers coming through. What is probably the best thing to happen to these players is the consolidation that we've probably seen in the industry. So PVR taking over SPI Cinemas, what you've probably seen in terms of screen additions happening over the past few quarters. I think that trend can very well continue. And again, I think the key variables or monitorables that one probably looks at, the average ticket prices, the ATP prices have shown a steady uptick over the past few quarters as well, based on the steady content that is coming through. So there are expectations of a strong pipeline, as you mentioned, both in terms of Bollywood movies coming through and the Hollywood movies coming through as well. So I think ATP prices are on the uptrend for movie exhibitors at this point of time. The F&B business is where I think the gross margins are the highest, and though I think they've taken some amount of an aberration in terms of cuts, if I may call it that way, to probably protect the kind of hoopla that was created in terms of price increases, you're probably still seeing a reasonable amount of gross margins on the F&B part of the business. The advertising revenue growth, which is the third element, I think, is holding up steady for these companies as well. So I think the utilization levels catching up, the expectations in terms of the overall earnings profile remaining strong and steady, the margin profile remaining strong and steady, I think this is creating a base case for strong earnings momentum to continue for some length of time. And though we talk about digitalization and so on and so forth, I think at least for the next few years, I think moviegoers are still going to go to cinema halls to probably look at movies on the big screen. So I think these guys are going to benefit from all these elements. One might very well argue that valuations are on the higher side. But hey, again, I think you've got good content coming through. I think the earnings flow will also come. So I think anybody holding on to these movie exhibition stocks should continue.
Okay. Before we take in the closing strategies, I think we need to take one key question at hand, which is ahead of the Infosys and TCS numbers tomorrow. Is there a possibility of trading these stocks today? Options, futures, what have you? And that's the key question that we're asking both our experts. Hadrien, Mendonca, to you first. Would you trade an Infosys or a Wipro ahead of the numbers tomorrow? The numbers will come out post-market hours tomorrow, remember.
Yeah, absolutely. In fact, Infosys has actually corrected for the past 3 consecutive trading sessions, and that is a very good thing that has happened, because what is actually being observed is that it is finding support at its previous breakout zone, also finding support at the simultaneous 50-day moving average zone. So I think around these levels, one should definitely take a bet on Infosys. You can also do a BTST kind of a play on an Infosys, wherein we could expect the stock moving towards the 750 levels. So yes, I would go long on an Infosys, keeping tomorrow's event in mind.
What about TCS, Bala?
TCS is the bothersome spot, Devina. The 2100 is an important resistance for it, and it's been behaving a little bit odd for me, and a little bit of discomfort the way the short-term charts are panning out. So it'll be a bit of a wait and watch for TCS. If it does manage to take out 2100, it's got a very bullish move closer to 2600. But so in that sense, if you're bullish on it, you might want to buy out of the money call. So that'll be a cheap fixed risk reward. So I would think it's a better strategy to go long on the CNX IT index rather than individual names. But if you have to be in an individual name, I think Wipro and Infosys are much better off. I would think Wipro's will take out the highs it registered in end of February, and Infosys is heading for somewhere close to 810. So that in that sense, Infosys and Wipro seems to be balancing out any possible negatives for TCS. So TCS is a bit of a bother for me. I hope I'm wrong, and I hope it takes out 2100.
All right. So still preferring an Infosys versus TCS, and then Wipro also versus the TCS, and even Hadrien liking an Infosys for a buy today, sell tomorrow idea. 8 minutes left to go for market closing, so let's get into those closing ideas from both our technical experts. Hadrien, I'll start off with you first.
Yeah, I'll go with the long on Indiabulls Housing Finance. It looks pretty good bet for a mean reversion play. I think it is corrected, very neatly in the past 4 to 5 trading sessions. A good time to re-enter at the lows. I think we are expecting a short-term target of 880 levels, keeping a strict stop loss at 835.
Bala?
Yeah, I would go with the long on PVR. I think it's breaking out, and even it's clocked record highs, as has been pointed out. And I think further in the morning's open tomorrow, I think it's going to continue to continue the trend that we are seeing the last hour, and we can even hold on post tomorrow's positive open. I think it's heading for somewhere close to 1900. PVR as well as Inox Leisure, both are looking pretty positive on charts.
Okay, just one quick follow-up, Hadrien, on Jubilant Foodworks. It's a stock that isn't doing too well. It's trading at the lowest point out of there, fairly high volumes. What would you do here?
Yeah, I think if you go by the weekly charts, there is still some space on the downside. No doubt it is approaching its 50-day exponential moving average, but I think that will actually give a little bit of breathing space for Jubilant Food before it further starts falling lower. So I think one should be a little careful, because the trend, in the past 2 weeks is continuously looking weak.
Okay. Mayuresh, Joshi, fundamentally, Jubilant, Westlife, maybe a specialty restaurants, this consumption QSR theme, what do you think of it?
It's highly competitive, Neeraj, and I think a lot of stores locally have also sprouted up over the past few years, which are giving intense competitions to all these guys. But again, I think the same sales store growth has been extremely strong for most of these companies. The kind of innovative menus that they probably bought on their table, I think that's an encouraging aspect as well. When you're probably talking about the digital ordering part of it, I think the digital ordering part has also improved significantly, which also alleviates the concern for pumping in more costs, specifically the operating costs when you're talking from an employee perspective or a rental perspective. So I think the rental and employee costs should get capped off. At the same time, I think for store openings that probably come through, I think the store openings are going to happen in a very constrained fashion, where I think the break-even points are going to be justified in terms of the studies done as per the area that they're probably opening up. Again, I think from this pack itself, I think Westlife is something that I still continue to remain extremely positive about. I think all these changes that they probably brought onto the table, I think is reflecting very, very positively in terms of numbers. And expectations in terms of strong earnings momentum continuing, I think can get very well reflected in terms of both the SSG showing a very strong uptick and the expectations of margin performance clearly on the leverage part as well, on the operating leverage part that is. So I think at pick and choose, I think Westlife development is something that will continue preferring.
Mayuresh, we'll let you go on that note. Thanks so much for taking the time out and being with us today. Appreciate your time.
Thank you so much.
That's Mayuresh Joshi. As we start wrapping up, it makes sense to maybe talk about the top performer today. It's reversed some losses, and that is Indiabulls Housing Finance. 843, Devina and counting. So good going really for this boy. As is Bharti Airtel, which seems to have reversed these losses. Bala, you want to comment on these two? Any one of these two names?
See, Bharti is not the best of charts, so Bharti is a very clear avoid. It had been struggling between 340s and 350s, and now it's trying to drop back into the range. That's not the price action you want to see. So Bharti Airtel is a clear avoid. So instead of Bharti, if you want to be in the space, Bharti Infratel is a slightly better chart compared to Bharti. So I would think that Bharti Infratel is it doesn't move much, but if one has to be within the space, one can keep a stop below 307 and expect some sort of bounce towards 335.
Okay. So leave Bharti out. Indiabulls Housing, Hadrien.
Yeah, Indiabulls Housing Finance was one of the stocks that we are bullish on. I already have a call on this stock. We just discussed a few minutes back, but I think it's a very good mean reversion play for a lot of traders, swing traders. One can consider going long. In the short term, we're expecting target of 880 in the near term.
Okay, gentlemen, stay on. We'll just take in final thoughts from you, but let's start wrapping up the markets in the session today. And well, we now getting used to chalk and cheese almost every other day. It was up day before yesterday, down about 1% yesterday. In today's session, flattish, no signs of too much of stress, ending in the green and trading in a very tight band throughout. That was the nature of trade today. Even for the mid caps and the small caps, a very narrow band, no dramatic moves, about 0.25% higher. So ho-hum, the kind of trade that we saw today. Let's talk about the large caps first, and then we'll talk about the mid caps. What moved in the large cap arena? Well, Indiabulls Housing Finance, 2% higher. Bharti Airtel, 2% higher. Bajaj Auto had some gains, about 2% higher as well. There was strength in Bajaj Finserv. Dr. Reddy's was up about 1.5%. Reliance about 1.5%. GAIL, Bajaj Finance and State Bank of India. Essentially, Reliance Industries giving that support to the markets today. What didn't do well, not too many heavyweights which corrected, but for Infosys, but Vedanta was the top loser. Some losses in Tech Mahindra and Infosys ahead of an IT and HCL Tech and TCS too. So IT was the sore spot today. And ICICI Bank was amongst the other ones that was giving company Z Entertainment about 1% lower as well. So a lackluster day of trade. Few movers. What about the mid caps and the small caps, Devina?
Well, not much action there either. And as we saw at the start of the show, the market breadth also looked extremely weak since early afternoon. In fact, since morning, since they flipped over and you had bears taking charge. Let's start talking about a few stocks that have managed to hold ground in today's session, while the indices have not done a whole lot much. So you've got a GVK Power and Infra that's done well in today's session. The stock's going to end the day higher in the green by a good 7%, and majority of those gains have come in the last half an hour of trade, if you can see that intraday chart. Manappuram Finance is the other one that's looking strong. Volumes have picked up too as well, supporting the pricing action on the stock. 5.7% higher. SL Propack, that's another name that does well. Max Financial, that's doing well too. It's going to end the day with gains of closer to 4.5% and a gradual slope upwards. So it's been a graduating climb for Max Financial Services. CG Power, Ashok Leyland. Then you've got the likes of a Tata Global Beverages that's doing well. Shankara Building Products sees a big uptick of about 9% and volumes have been much higher on the stock than its last 20-day average. And an HDFC Standard Life, that too is doing okay for itself by the end of trade this afternoon. That's up about 4.5%. Good volume, solid name there at 394. Losing out in today's session, RComp, that's made its fixture out there in terms of the losers. It's yet down in trade once again. JSPL is the other one that looks weak in today's session, followed by Century Ply. That's down, I think, the 4th or the 5th straight day in a row. So there is more pain building up in the counter. It's down 3%. Avenue Supermarts, while in Nibbles Housing Finance is okay for itself, it's not, all the other housing finance companies that are doing well. So PNB Housing Finance, for one, is down in trade by about 3%. Edelweiss looks weak, and so does the Jubilant Foodwork. So that's where much of the pain has come in today's session. But for close, the first day of the polls beginning, and we've got the market giving there's been no signs, no sort of a trigger point at all for the markets in today's session.
Yeah, it was just one of those days, but maybe the market's telling us that it's when an event will happen within elections is when we'll react. Otherwise, we don't want to unnecessarily react just because the elections are on.
It's just the start of the race.
Just the start of the election. Yeah, that too. Well, bring up the turnover and let's see how the turnover has been in the session today. It's, of course, Thursday, and therefore you would anticipate that this number would be high, and it is. The cash market number is low today, not that high. It's just the F&O market activity.
Actually, compared to last week, I think the number was more than 20 lakh crores. I think towards nudging 21. So this week itself, even for the futures and options side, is slightly subdued compared to last week.
Yeah, and then the market breadth would be, I don't know what to make of whatever the number is. This could well have been a reverse and still we wouldn't have been surprised. So, I know it's okay. Close to 1:1, maybe slightly in favor of the declines. Nothing too dramatic, honestly.
Yep. Let's get a sense as to what one does as we step into trade tomorrow morning from both our technical experts. I'll start off with you, Hadrien. Your comments on what one needs to watch out for come tomorrow?
Yeah, come tomorrow, I would definitely be watching out for BHEL. It's one of the PSO units which has done very well. I think it will continue to extend the momentum tomorrow, and most probably we could see BHEL heading towards the levels of 78. So I think a stop loss can be upgraded from 71.5 to 73 levels. So it comes in the money. So tomorrow I think BHEL should be one stock that you should watch out for.
Okay, Bala, what about you? Your closing thoughts?
Yeah, watch out for action in Tata Group names. It's not just Tata Global Beverages that's seeing action. Tata Power and Tata Communications. Tata Power is the weakest among this, but Tata Communications also got a very interesting charts. But there seems to be something showing up in many of the Tata Group names. So I'll watch out Tata Communications for a bullish bet.
Okay. Got that. Tata Communications, what Jay's watching out for. I'd like to leave it at that, and thank you both gentlemen for joining in this afternoon. Hadrien as well as Jay, appreciate your time. And on that note, it is the end of this edition of Countdown from Neeraj, myself, and the entire team that's put the show together. Thanks so much for watching.